Welcome to our 2017 webinar series. This year's theme is Creative Solutions, Our Concepts, Your Clients. Each month we'll focus on stories of your clients spanning through various generations. We'll explore plans for your professionals starting on their new careers, newlyweds and growing families, small business owners, and soon-to-be retirees. We'll show you how we carefully crafted risk management strategies to help your clients enjoy life in the moment. This month we'll highlight on underwriting and how comprehensive pre-underwriting can avoid surprises and declines. Each month's series will last about 50 minutes, and you must be logged on for the full 50 minutes to receive CFP credit. And since timing is everything, please ask questions as you have them by typing them in. We'll do our best to answer them as they come in. Today's webinar will be recorded and will be posted on our website within a week in case you missed it. And throughout 2017, loyal fans can receive 9 CFP CE credits, 1 for each month. Today's presenter is knowledgeable in a wide range of solutions here at LLIS. She joined LLIS in 2009, handling many of your clients' cases for disability, life, long-term care, and annuities. And since 2014, she has been supervising our very busy new business team. And now, Jennifer Stiles.
Thank you, Claudia. Today we will be talking about the innovation of life insurance underwriting. We will be going over the purpose of underwriting, some of the quoting systems and the difference between the online quoting systems and LLIS quotes. We'll go through the underwriting process from start to finish and what's all involved in that, as well as the new express underwriting that some of the insurance companies are implementing, and we're thrilled to be able to kind of outline that with you today. So let's start off. What is the purpose of underwriting? Really, underwriting, the purpose of it is to assess and classify the degree of risk that an insured represents to the insurance company. And the underwriter's job is to decide whether to accept or decline that risk. The higher the risk, the higher the premium. Here's a group of insureds that represent a similar level of risk to the insurance company. And when it comes to underwriting classes, I like to think of them as buckets. There are predetermined conditions that you must meet in order to fit into that bucket or get that approval. And there are predetermined premium prices associated with these buckets, and that's what allows us to be able to accurately quote, run quotes for your client. I like to think of the Preferred Plus, Preferred, and Standard Plus as Superman or Superwoman premium prices. These are people that have longer than average life expectancy, people who are approved at these classes. Then there is the Standard Premium. This is somebody who has average life expectancy. Below that are substandard ratings or table ratings. And the way the table ratings work is that it is done on a proration of the standard premium. So say you have a client that was approved at standard rates and their annual premium was $1,000. If that same person was approved at table A or table 1, some of the insurance companies do the letter form, some do the number form, that would be 25% higher than the standard premium. So their premium would be $1,250. Table B would be 50% higher than the standard, so it would be $1,500. Table C would be 75, so it would be $1,750, and Table D would be double the standard premium, or it would be $2,000 per year. This is the way every single insurance company does it. Some do it based upon the standard premium and others do it based upon the Standard Plus premium, but it's all done on that proration. And depending on the insurance company, there are anywhere from, say, 10 to 15 table ratings. And then beyond that, then there would be a decline, and that's if the insurance company is not willing to accept that risk. Within these buckets, there are also smoker and non-smoker versions, okay? Now, a smoker rate is anywhere from 3 to 5 times the premium of a non-smoker. So it makes a huge difference. There's also male and female. Everything else being equal, men's rates for life insurance will be higher than females because females live longer on average. Every once in a while we'll see a flat extra. It's not that common, but we do see it every once in a while. So say you have a client who health-wise is a preferred plus, but they like to skydive every month. So the insurance company may approve them at preferred plus, but then tack on an extra $5 per thousand of coverage due to the hazardous activity. So that's kind of how that works. Now let's go over the quoting system. Here we have Dave, 25 years old. He works out, he eats healthy. So he quickly wants to get a quote, and he thinks he's should be eligible for the preferred plus rates because he's healthy and works out. So in this day and age where everything's available at a swipe of a finger or a click of a mouse, Dave goes to the internet to get some online quotes to a search engine such as quickquote.com. And he completes the information, and as you can see here, there's some basic information here: height and weight, whether he smokes, and there are some medical questions that are asked on this quote request, but it's not a very comprehensive list. It doesn't ask whether he's ever had a stroke or whether he has sleep apnea or any liver or kidney disorders. So nonetheless, Dave completes the online quote, and this is what shows up for $2 million of life insurance for a 20-year term. And these are monthly premiums. And as Dave thought, he would be eligible for Preferred Plus with several companies based upon what he put on the quote request. He would probably apply with AXA because it's the least expensive premium, but I can tell you right now, based upon the information that he put on the quote request, he may not actually be eligible for Preferred Plus rates with AXA. And let me show you how this works. So Dave moves forward, and he has an exam done, and his blood pressure is a little elevated. Not high enough to warrant medication, but certainly high enough that it knocked him out of the Preferred Plus category with every single company other than Banner Life Insurance Company. But one other thing that Dave, he has the need for speed, and we did not know that. He's actually had 3 speeding tickets in the last 2 years, and that knocked him out of the Preferred Plus and the Preferred category with Banner and several of the other categories with the other insurance companies. So that was not even something on the quick quote request regarding speeding tickets. So if Dave applied with AXA, the best offer he would get would be Standard Plus with a monthly premium of $109.89. Had we known all this information ahead of time, we would have recommended that he apply with United of Omaha for a monthly premium of $96.47. Now you may say, well, geez, maybe Dave should apply with all those companies and see what offer comes back best, and then just take that policy. Well, shopping around for quotes is fine, but applying for multiple policies at the same time for the purpose of shopping around actually negatively affects the underwriting process. And we'll explain that later on in the webinar, why that is the case. It also costs the insurance company a lot of time and money. Dave needed to have an exam done. They may order medical records. All that is paid for by the insurance company, so it wastes a lot of people's time and money. But that's okay. We could do this shopping for you. And in fact, if a client comes to us and we find out they're applying with another agent and another company, we're going to recommend actually that they continue applying with that agent and that company rather than applying with us. Now that being said, if they get an offer that they're not happy with, we could see what we can do to maybe improve that offer. And we can do the shopping for you and your clients. We can also streamline the underwriting process if they're applying for several products such as life and disability insurance. We can make sure that they only need to be examined one time. So, sit back, relax, and let us do the work for you and your clients. Now, let's take a look at the LLIS quoting system. If you go to our website to request a quote, this is what you're going to see. We ask, height and weight. We ask tobacco questions. We also ask quite a few health questions. In fact, it even goes on to the next screen. We'll ask about prescription medications in the last 5 years and hospitalization in the last 10 years, family history questions, as well as lifestyle type questions such as speeding tickets and skydiving, things like that. That all plays a role in your final approval. You may take a look at this and say, wow, that's a lot of information for a client to complete just to get a quote. It is, but in the long run, it ends up saving a lot of time and a lot of money for your clients, because we want to make sure that they move forward with the correct company. So let's take a look, since this topic is pretty much on underwriting and what's involved in that. I think a lot of people are not totally familiar with all the nuances of underwriting. Let's take a look at what's involved in the underwriting process. Here's a map of our journey today. We start off with the preliminary stage. This is the first stage in underwriting. This is where we build our foundation. We gather all the information we need so that we can, provide quotes to you and your client. Once an application is formally submitted to the insurance carrier, it is in the pending stage. This is where the underwriter does their risk assessment. Once the underwriter reviews everything, it goes to the approval stage, and this is when a risk classification is actually assigned to your client, and this is when the premium is solidified. Up to this point, what you receive from us are just quotes based upon the information we know about your client, but the underwriter makes the final approval. Once an application becomes a policy, once it goes to the issue department, and then it's sent to us to review, and we send it to the client asking for the premium and any other delivery requirements that may need to be signed. And when all that's returned, the policy is officially in force. Now we'll go through each one of these stages in a little more detail. We'll start off with the preliminary stage. What we like to do here is paint a picture of your client's health and lifestyle. The more details we have, the clearer the picture is for the underwriter. Just like these pictures here, all three of these are a bowl of fruit. The first picture, as you can see, is not as clear. You may not even realize that that is a bowl of fruit. The second one's a little bit clearer, but there's no doubt that the third picture there with all the details makes it a nice clear picture. And we like to try to do the same type of thing regarding underwriting for your clients. We're not a big fan of having surprises. We try to accurately quote as much as possible, so we do a lot of pre-underwriting. Now, what's involved in the pre-underwriting? Well, once your client completes a quote request, it'll be reviewed by one of our advisor services team member. This is somebody who's an expert in that product. We have the insurance company's guidelines, and some companies are more liberal than others, and we take that into consideration when we're reviewing your client's information. If we require more information, we'll reach out to you or your client. A perfect example would be if your client said that they actually scuba dive. We may send a scuba questionnaire to your client asking more details, like how often they go, whether they're certified, how deep they dive, questions such as that. Once we have all the information we need, we'll then send initial quotes to you and your client. Now, if your client reviews those with you and says, oh yeah, this looks good, let's move forward, the next step would be an in-depth phone interview with their designated case manager. This is where we gather all the details we need, any physicians they've seen in the last 5 years, the dosing of prescription medications, and any diagnosis, things like that. Your client needs to trust us to be, confidential with their information, but at the same time, we need to trust that they're being transparent and very detailed with their answers. Because the underwriting guidelines are different for different insurance companies, we want to make sure we find the right fit. So we need as much detail as possible. A perfect example would be somebody who's a cigar smoker. If your client is a cigar smoker, some insurance companies would consider them a smoker. Others are fine with cigar smoking as long as there's less than 10 cigars a year. So if your client is a cigar smoker, we're going to need to know those details because we want to make sure that we are going to quote a company that's not going to consider them a smoker. After the phone interview, we will then sit down with the advisor services team member and review the information that we just gathered now that we have more detailed information. Oftentimes it may be a quick confirmation email that is sent to the client like, hey, your quotes have remained the same, which company would you like to move forward with? But there are times that we have situations that are not as clear. And in those type of situations, a perfect example would be, say you had a client that was diagnosed with breast cancer 7 years ago, had a lumpectomy, had chemo for 2 years, but has been treatment-free for the past 5 years. It's not so crystal clear on which company to quote or which risk classification to quote. So what we do in those situations is we complete an x-ray. Once we have all the details, we send that information through a computer system to multiple insurance companies. We do not use the client's full name or date of birth, but we try to get a tentative approval from insurance companies prior to submitting an application, saying, based upon this information, how would you tentatively approve this client? You may have one insurance company that comes back table F, another one table H, maybe 3 come back decline, and you may have one that comes back saying, well, as long as the recent mammograms have been normal, we would consider standard rates. So in that type of situation, we may make an actual recommendation and say, Sally, we recommend you apply with Banner Life Insurance Company because they would consider you for standard rates based upon your health history. So we would send those quotes to you. And the client, once they had a chance to review them, if they wanted to move forward, we would then complete an application and send it to your client for signatures. An exam would also be ordered. The exam is either ordered by LLIS or by the insurance company, and then the examiner contacts the client directly and goes out to their home or their work to complete the exam. The examiners are not employees of LLIS, and they're not employees of the insurance company. They're a third-party paramed company that goes out and completes the exam on behalf of the insurance company. So the pending stage is the second stage here, and the pending stage is when an application has officially been sent to the insurance company. This is where the underwriter does their risk assessment. Now let's take a look at everything that the insurance company or the underwriter is going to review to assess the client's risk. There's a lot of information. And just for your own knowledge, this stage here, just this stage here, typically takes at least 2 to 3 months. And you'll see why as we go through the webinar, why it takes so long. The first thing the underwriter is going to review is the application, and we're going to go through each one of these in more detail, but the application, the medical exam, the motor vehicle report, the medical information bureau, the prescription database, medical records, and an additional interview, phone interview would be done. Now, the first thing that the underwriter is going to review is the application. So what sorts of things are on the application? Well, demographic information, the client's name, date of birth, address, beneficiary information, whether they're a U.S. citizen, because that can play a role in which company we move forward with. There's going to be some health information that's pretty self-explanatory, their height, weight, blood pressure, medications, any sort of diagnosis. There's lifestyle type questions on the application, such as scuba diving, skydiving, alcohol and drug use, any sort of speeding tickets. As we saw in Dave's situation, it can affect the underwriting approval, as well as any sort of foreign travel. There's also going to be family history questions. Now, when it comes to family history, we're only concerned about parents and siblings with a history of cancer, heart disease, diabetes, kidney disease, or stroke before the age of 60. Some of the insurance companies only care if somebody died of those conditions prior to age 60, but some of the insurance companies care if there was even a diagnosis prior to age 60. And like I said, we're only concerned about parents and siblings. We don't ask about, grandparents or aunts and uncles. And then there's financial questions. Typically, the purpose of life insurance is income replacement. So somebody who makes $25,000 a year cannot apply for $10 million of life insurance. There are required entries on the application regarding, income, net worth, whether somebody's ever declared bankruptcy. We need to know those type of questions. For your own information, a homemaker can apply for $1 million of life insurance as long as the breadwinner spouse also has $1 million of life insurance. So that's just the application, and that's a lot of information right there. So the second thing that they're going to review is the medical exam. Your client will need to have blood tests done. And the types of things that they're looking for are organ damage. So they're going to test for liver function tests, kidney function tests. They test for cholesterol and HIV as well. Your client will need to have a urinalysis done. A urinalysis can also show whether your client's having any sort of kidney issues, but there's two other things that they test for in the urine that I'd like to go a little more in detail with. The first one is nicotine. If your client tests positive for nicotine, they will get smoker rates or nicotine rates. And as I already indicated before, nicotine rates are typically anywhere from 3 to 5 times the non-nicotine rates. They will get nicotine rates or smoker rates even if they're using nicotine gum or a nicotine patch, because there's no way of determining when you test positive whether that's from smoking cigarettes every day or whether that's from a patch. Okay, so that's why it's important to have a comprehensive phone interview and your client be totally upfront about that. Now, that being said, if we know if we know ahead of time that your client's on a nicotine patch, there is 1 or 2 companies that we can go to that will consider them for non-nicotine rates, but we need to know that information ahead of time. The other thing that they test for is drugs. So, and the one thing in particular I'd like to talk about a little bit is marijuana, okay? That marijuana use is one of the #1 quickest changing thing in underwriting. As laws change, the underwriting guidelines change constantly. Most insurance companies are okay with occasional marijuana use. Now, what's occasional? We're talking like 1 or 2 times a year, okay? The underwriter's not concerned whether they live in a state where it's legal or where it's not, because no matter what state you live in, it may be legal in that state, but marijuana use is still against federal law. So the underwriters treat it totally the same no matter which state you live in. If a client is smoking marijuana, occasionally smokes that, we will need to do an x-ray because we want to make sure that we move forward with the most appropriate company. And like I said, because the underwriting guidelines are changing constantly, we would want to do an x-ray on that. The client would still need to test negative in the urine though. They will also have their blood pressure taken and their height and weight during the exam. Depending on the amount that they're applying for and the age of the client, there's a possible EKG that would be required. And the same medical questions that we asked, the examiner may ask as well. Now we get this question a lot. I just had my blood work done or my physical at my doctor's office. Can I use that instead of being examined? And that's a great question, but the answer is no. And the reason being is that at your physical, your doctor doesn't typically test for the same items that the underwriter needs to see. You know, most doctors are not testing for HIV and, you know, for drugs or nicotine. So those are the types of things that we need for underwriting for insurance. So we would still need to have an exam done. And then if the questions, a paramed exam needs to be done where the medical questions need to be asked, that needs to be done on that company's paperwork. So unfortunately, we cannot use, you know, their physical lab results in lieu of being examined for life insurance. So that's the second thing, the medical exam. The third one is the motor vehicle report. Your client applies for life insurance, their motor vehicle report is going to be ordered. And what they're looking for are speeding tickets, accidents, DUIs, and driver's license suspensions. These are considered high-risk clients if they have several moving violations, and it can affect the final approval, as we saw, you know, in Dave's situation with his speeding tickets. The next thing that's going to be reviewed is the Medical Information Bureau. Remember earlier when I said if you apply for multiple policies, it can negatively affect the underwriting process? This is where that comes into play. The Medical Information Bureau is a database that tracks insurance applications, okay? So if your client is applying for multiple policies, the underwriter is going to see that. They're going to see that there's pending applications out there, and they're going to come back and question that. So if Dave applied with 10 different companies for $1 million each, okay, for the purpose of shopping around, the underwriter is going to come back and ask about that, and they're going to see that there's $10 million of pending insurance out there. So there's several things that could happen with that. The underwriter could say, well, I'm going to underwrite them for $10 million, and the client doesn't qualify for that. So I'm not even going to make an offer at all because there's too many pending applications out there. So the underwriter could do that. The underwriter could make an offer, and the client may need to sign an amendment saying that they're not going to place the other policies. They want to make sure that the client is not overinsured. The underwriter wants to make sure that a client is not worth more dead than alive. So they underwrite for that. And so that's one of their concerns. Another thing that the medical information, another purpose, is to protect against fraud. You know, a client could apply for insurance, get an offer, not like the offer, and decide to apply elsewhere and lie about the situation, okay, in the hopes that nobody will find out. The underwriter for the second company is going to see that, that there was a pending application or that there was an approval, and there may be a code associated with that approval, such as nicotine. So it can protect against people trying to lie about, you know, applications or approvals, previous approvals. The other thing it could be, say I need $1 million of life insurance, okay, and I have a heart condition, but I don't want the underwriter to find out. So what I'm going to do, instead of applying with one company for $1 million of life insurance, I know if I apply for $100,000 of life insurance, they probably won't order my medical records for that amount. So what I'm going to do is apply with 10 different companies for $100,000 each for the purpose of getting $1 million of life insurance. So again, they're going to see those pending applications and underwrite you for that full amount. By protecting against fraud, it actually protects the insurance company, but it actually protects all the consumers as well, because when there's fraud, we all pay for it. So it, by doing this, it helps keep the premiums lower for everybody. So again, let us do the shopping for you rather than just putting a bunch of applications that can negatively affect the underwriting. Your client's name is going to be run through a prescription database. That's another thing that the underwriter is going to review. The prescription database tracks medications that have been prescribed and filled within the last 5 years. Sometimes the underwriter can see the name of the medication. Oftentimes it's more the classification of medications, and oftentimes it may be color-coded, like green, yellow, and red. A green medication may be something that an underwriter is not even going to come back and question. That could be, an example that could be like a random antibiotic 6 months ago or Tamiflu, something like that. A yellow medication would be something that the underwriter would come back and probably ask us about. That would be like an anxiety medication, depression medications, or pain meds. A red medication would be something that would probably result in a decline, such as chemotherapy or AIDS treatment. And we had a situation recently with this. We had Meredith, who was applying for life insurance. We did for term insurance, we did a phone interview. She claimed no current or past prescriptions. When they ran her name through the prescription database, there was a yellow medication that showed up when we questioned her about it. Apparently, she took 3 medications in the last 4 years for situational depression. She wasn't currently on medication, but she had taken past medications. And so the underwriter came back with a standard approval. We did not think that that was a good approval at all, given the fact that she wasn't even on medication currently. So in that situation, now that we had the full information, we were able to shop it around, and then she was approved at preferred plus rates. So with full information, we were able to find the right fit for her, just like Cinderella was able to find the right fit with the glass slipper. And one thing of note here, had we known that information up front, because Meredith had to reapply with a different insurance company. So, again, it was an additional couple months of underwriting, a month or 2 of underwriting that could have been avoided had we known that information up front. So again, if nothing else, just encourage your clients to be as upfront as possible so that we're not wasting anybody's time. The next thing the underwriter is going to review, and this is the bane of our existence here, are the medical records. This is the longest part of underwriting. It can take months to receive medical records. And they may need to order additional records. For instance, say I was applying for insurance and the underwriter ordered my primary care records, and they received those. It took them a month to get them, but they received those records, and there was a note in there about how I was having chest pain 6 months ago, and I was referred to a cardiologist. So my case manager calls me and says, "Hey, Jenny, it looks like you were referred to a cardiologist. Did you ever go see one?" And I can say, "Oh, yeah, I forgot to mention Dr. Smith. I only saw him once, but yeah, I did see that cardiologist." So I give the name and address of that cardiologist, and now they need to go and order those records. So that's another additional month or so to wait for those records. Possibly you need to have additional tests done. They get my cardiology records, and there's a note in there from the cardiologist how he recommended that I have a stress test done, but there were no results in there. So my case manager calls me again and says, did you ever have that stress test done? And I can say, no, I went and saw the doctor in October, and then, Thanksgiving and Christmas and New Year's, and life gets busy, and I just didn't have time to have that test done. An underwriter is not going to make an offer on any sort of life insurance if a specialist recommended a test to be done and the client did not follow through with that test. They're going to say, and we're going to postpone making an offer until the client has that test done at their expense, because that was recommended by the cardiologist. So now I need to call my cardiologist and schedule a time to have that stress test done. So as you can see, this is an ongoing process and can take multiple months. Somebody whose records are at the VA, it typically takes anywhere from 4 to 6 months to get VA records. Most are not that long, but and it all depends. If some physicians have electronic records, they can be released in a matter of a couple days. Others take months. So it's really depends on the individual client's doctors and how they process those. Now, we do have we don't order the medical records here, and neither does the insurance company. They have a third-party vendor that orders medical records. Every once in a while, we'll call the doctor's office if it seems to be taking a long time. And there was one time that we called, and we were told that the request is pending to be processed, that they were busy with patients, because it's the nurse actually who makes copies of the medical records. So the nurse was busy seeing patients, and they only do medical records when they can. And we thought, I don't know the last time you were at a doctor, but my doctor's office, it's incredibly busy, and I can't imagine, the nurse having time to do medical records. So we thought that that would take a long time. There was another time we were following up on whether the doctor's office even received the request. And the number we were given said, do not call to check on status of medical records being released. Check your fax machine to make sure it went through. So, and the follow-up to that was if you hadn't received the medical records in the past, if it's been 4 to 6 weeks and you haven't received the records, please call this other number to see if we received the request. So these are just some of the daily struggles that we have regarding trying to get clients' medical records. And every once in a while, we'll reach out to the client and say, hey, can you call your doctor's office and see if you can speed the process up? Because actually having the patient call sometimes speeds the process up. And then the next thing that the underwriter will review is oftentimes insurance companies want an additional phone interview done. And it's typically either done by the insurance company or a third-party vendor that will do it, on behalf of the insurance company. And this is common in large face amounts, and if there's any sort of discrepancies between, say, the exam and the application. When I'm talking large face amounts, I'm talking $1 million and over. It doesn't need to be, $10 million. So it's not uncommon to have an additional phone interview. We always prepare our clients. You are asked the same questions anywhere from 2 to 4 times during this process. So as you can see, the underwriter is like a detective trying to put all the pieces together to see the whole picture of your client. And they obviously investigate many sources. Now, those are just the sources that they review to underwrite your client medically, but there's also administrative underwriting. If your client's planning on replacing an existing policy with this policy, there are certain replacement and disclosure forms that need to be signed. if somebody lives in New York and they're planning on replacing a policy, there's additional process that we need to go through up front, and it takes an additional month. So that process takes a month to go through prior to your client even being able to receive an application. So there's a lot of paperwork for New York if they're planning on replacing any policies. If the policy is going to be trust-owned, we'll need a copy of the trust, and they need to verify that the trustee signed in the appropriate places, as well as whether there's an insurable interest. My next door neighbor cannot purchase a policy on me and be the owner and the beneficiary. There's no loss to my next door neighbor if I were to die. And so there needs to be insurable interest. So the underwriter, makes sure that there is, at the time of application. So as you can see, that's exactly why this process can take, at least 2 to 3 months. Once they review everything, hopefully they'll be able to, have an approval, and it's at that time the client is actually given a risk classification or approval. And it's at this point that the premium is technically solidified. We'll contact the client and the advisor of the approval. Adjustments can be made at this time. If a client applied for $1 million of life insurance and said, you know what, I really only need $800,000, that's fine. We can bump the amount down and have the policy issued for $800,000. We can't bump it up, so we always recommend, if a client is not sure of the amount that they're going to place, we always recommend that they apply for the higher amount, because we can always bump it down, but it gets a little more complicated to increase it. So now, we already kind of went through the buckets and the approval classes for life insurance, the preferred plus, preferred standard. Life insurance or long-term care and disability also goes through medical underwriting, but they have fewer classifications, okay? We tend to quote standard for long-term care because very few people ever get preferred. They do have that approval though. But that's not very common. Then they have class 1 and 2 before a client is considered insurable. Disability, again, we don't typically quote preferred. We tend to quote standard or select with that. With disability, we sometimes see modified coverages where instead of to age 65, they make it a 5-year benefit period. There may be percent ratings, but what we see more than that are exclusions. There's literally 3,000 things you can become disabled from, so it's not uncommon to have an exclusion on a policy. And then there's the uninsurable. But as you can see, life insurance has many more approval classifications. All 3 products do go through medical underwriting, but they're looking for different things. Life insurance is concerned with mortality issues. What are the conditions that somebody is going to die prematurely from? Long-term care and disability, they're concerned with morbidity issues, things that they're going to need long, care for, or that's going to prevent them from being able to work. Long-term care and disability are not as concerned about things that you're going to die from. They won't need to pay a claim if you die. So even though you do go through medical underwriting with all 3 products, they are looking for different things. We actually had a client that applied for life and disability at the same time. They were approved at preferred plus rates for life insurance and was declined for disability. And the client actually had an eye condition that ultimately will lead to blindness. The life insurance company was not as concerned about that because they weren't going to die from that. Disability was very concerned about blindness, so they declined the person. So as you can see, you do go through medical underwriting, but they're looking for different things. As you can see, there's Alzheimer's and HIV or AIDS that are an automatic decline for all three products. Okay. There is some underwriting with annuities. Annuities more of a financial product, so there's really no medical underwriting, not with an immediate annuity anyway, maybe with hybrids, but there are a lot of suitability questions to make sure that this product is appropriate for the client. Especially in an immediate annuity, once you put the money in there, it's an irrevocable decision, so you cannot invest more than 50% of your liquid assets in an immediate annuity. So there are a lot of financial questions regarding that. Now, what happens if your client is not eligible for an approval right now? Perhaps the underwriter needs to postpone. An example would be my situation where I needed to have those additional tests done. I needed to schedule that stress test. Maybe in the medical records there was a recommended surgery, so the underwriter may say we'll make an offer once that surgery is completed and you've had follow-up appointments and everything's been kind of back to normal. Every once in a while, you may get a decline. That's not that common. Almost always it's due to something because of the amount of pre-underwriting we do. If there's a decline that we receive, it's almost always due to something we were not aware of, or certainly we were not aware of the severity. Once we have the details regarding that situation, we can do an x-ray and see if we can get them coverage with a different insurance company. Just because they're declined with one insurance company does not mean that they're declined with everybody. So, because like I said, some companies are more liberal than others with certain situations. So the client would need to reapply, but typically we can use the same exam and we'll be able to hopefully get them some sort of coverage. But if a client is approved and they want to accept the policy, it then goes to the issue department. The policy will be sent to us to review to make sure it's what the client applied for, and then we mail it to the owner, asking for the premium at that point and any other sort of delivery requirements that may need to be signed. Once all that's returned to us and we send it to the insurance company, then the policy will be placed in force. And it's really at this point that if a client is planning on replacing a policy that we recommend they cancel that policy at this point. We don't want them canceling any policy until this is enforced, because you don't obviously want a gap in coverage, and this process takes a long time, so we want to make sure they're fully covered while they're going through the underwriting process. Now that we went through the underwriting process a little bit, let's take a look at a case study here and show you how this works. Here we have Melissa, who applied for $3 million of life insurance. She mentions a history of having some benign moles. Her mother has a history of melanoma, age 58, and that's the more serious type of skin cancer. So we quoted her preferred with a premium of $1,239 per year. Once we received the medical records, we realized that, or once the underwriter did, it turns out that the moles were not benign moles. They were actually called dysplastic nevi. That is not cancer, but those are the precancerous moles that can turn into melanoma. And with the mother's history of having melanoma at a young age, the underwriter came back with an approval of Table B with a premium of $3,309. We did not think that that was a great offer, so we did an x-ray and we found a company that would still consider her for preferred, and she applied and did get approved at preferred with a premium of $1,324 per year. A little bit higher than what we originally quoted, but much cheaper than what her initial approval was. So, we will flip companies and essentially do the shopping for your clients like that when we need to, if they got an offer and there may be another company that would consider them for a better offer. So, I kind of went through the underwriting process, and that's the standard process. In the insurance industry, they have found that, the insurance companies pay for the exam and medical records, and they've done studies, and they've actually found with some of these younger people in smaller amounts that they're spending a lot of money on the underwriting process. And it turns out that even without that information, the majority of time they would have approved the client with the same underwriting class. So they're like, okay, well, why are we spending all this money doing this? So then they introduced the express underwriting. The standard way of underwriting, sometimes it can feel like, you ran a marathon. With the express application, it improves policy issue time. There's less paperwork and follow-up and fewer requirements such as exams and medical records. Not everyone qualifies for the express application. The insured has to be the owner, so this is not for a buy-sell or if a trust owns a policy. The insured needs to be the owner. If they're applying for $500,000 or less, ages 20 to 50, and in general good health, they could qualify for this express application. And the way it works is we would still do a phone interview and shop it around to find the best company for the client. We will do an express application, or what we call a drop ticket, to the insurance company with basic information regarding the client. The insurance company will do a phone interview, a comprehensive phone interview as well. They'll also run their name through the Medical Information Bureau, the Motor Vehicle Report, and the Prescription Database. Remember, that's a lot of really good information from those databases. If everything looks good, they may be eligible for the fast lane, which means no exam and no medical records, and they'll go straight to approval. They could essentially get an approval in a matter of days. The other option is we still do the phone interview, we shop it around, and we do the express application to the insurance company, and they're still going to do the phone interview, MIB, Motor Vehicle Report, and Prescription Database. But say the client said during the phone interview or during the prescription database there was cholesterol, elevated cholesterol, or cholesterol meds. So the underwriter may say, we may want to see what the cholesterol level is. Or we may want to order medical records, one or the other or both. So they would go through the standard application process before getting an approval. When available, we always recommend, to go through the express application because, hey, it saves everybody a lot of time to do it that way. So, we've been thrilled with this process and had great luck so far with that. But like I said, it's not everybody's eligible for it. In addition to the express application, policies now are being delivered, electronically as well. Typically in the past, policies would always go to the issue department, would be printed and bound, sent to us. We then review it, send it to the client asking for premium. We give them 2 weeks to send it back. Once we get that back, we send it to the insurance company. So a client could essentially go from approval to being enforced, and it could still take weeks to a month to have it enforced, going through that process. Now a lot of companies are doing the express delivery. So basically they would issue the policy, send it to us to review. We review it the same day and send it to the client electronically. They can sign electronically. They can download the policy as a PDF or print it out if they wanted a hard copy. Many of the insurance companies allow electronic transfer of funds to pay the premium or a credit card. So essentially it can go from issued to enforced in a matter of a few days rather than weeks. So that process is much quicker. It saves time, and we're all trying to be a little greener here, so it saves paper and saves some trees as well. So today we went through the purpose of underwriting. We went through the difference between online quote search engines as well as the LLIS one. We reviewed the underwriting process and what's involved in that, and I introduced you to some of the express underwriting that's available for your younger, healthier clients. So the top 10 things that make LLIS different. Well, this is a perfect example. We give free monthly webinars for our financial advisors. So take a look at our website to take a look at what topics are coming up. We're not your competition. We end up saving advisors and clients a lot of time and money, and we do a lot of pre-underwriting to avoid surprises for your clients. We proudly sponsor these organizations, so you may see our name around if you're a member of one of these organizations. We have multiple products: life, disability, long-term care, annuities, and hybrid products, and we have specialists that can help you with those products. And as well as we have a new website. We're calling her Alice. That will be launched in the next month or two. We're thrilled to be able to launch this. This will be a very advisor-friendly website. We can share sensitive documents with clients and financial advisors. We'll still send updates regarding the underwriting process, but advisors will also be able to log on to the website. You'll have an account and you'll be able to see where all your clients are in the underwriting process, as well as viewing annual statements for your existing in-force ones as well. Let's see, are there any questions? Let's see. Where's the top one? Sorry. Here we have a couple questions here, and I'm just trying to scroll up here to see. Okay, she's left. Hold on. And if there's not enough time for questions, I can certainly follow up via email as well. Somebody had several questions, but that person left. So anyone else have questions here? Do you have an educational webinar on hybrid policies? Yes, we do. And if you log on to our website under webinars, we have, as part of our monthly webinars, we do have one on hybrid policies. And we also do policy reviews. So if you have clients that may have life insurance or something like that you would like to possibly transfer into a hybrid product, we have, part of our advisor services team members can certainly review existing policies and look at those options as well. Somebody asked about how do half siblings get treated for underwriting. It depends on the insurance company. Typically, half siblings are not as much of a concern because obviously you can't determine if it's a family history issue, which parent it came from. If you have a half sibling that's from your mom and your mom had breast cancer and your half sibling had breast cancer, then it could be, they may look at that as being, a probability that it did come from your biological mom, but in general, half siblings are not as, they're not as equal, put it that way. Not a question. I've been through some of these tricky quotes and this is terrible. Okay, somebody just wrote a comment. that seems to be it for questions. If you have any other questions for me, you know, my email is Jennifer Stiles, JenniferStiles @LLIS.com. Feel free to email me directly if you were logged on here and just didn't have a chance to ask a question. I'm on the website as well, so you can reach me through there. But this was my pleasure, and I hope you log in next month to our next webinar. Thank you.